Good morning. Today we're looking at gold after a brutal sell-off on Friday, also Monday to be fair, but we kind of see a squeeze to the upside here. Yeah, a risk appetite returned on Monday, and it looks like gold scooped up some final stop losses down at 4,400 before reversing higher. But I would be careful. This looks like a classic dead cat bounce. Okay, so it's okay, it wasn't just technicals. The thing is that the Buy America trade paused and traders took profits on the dollar's surge because dollar has been surging right over the since last Thursday or so, following Trump's nomination of Kevin Warsh as the next Fed chair. However, this initial move yesterday, right, it was to the downside, right, before silver and also gold, right, reversed sharply. This particular volatility, though, because it is really increased, signals that the market is still digesting the new Fed leadership risks and margin hikes also from the CME. On the daily chart, and very importantly, the RSI has come down to the 50 line and it has reset. Okay, so momentum has reset. And while momentum has reset, we also have a hidden bullish divergence. Okay, so some would say, or I would say, if the rally comes up to 50 and reverses, then it's likely to be a dead cat bounce because dead cat bounces, the bounce typically is not as, you know, it's not as deep as to go to the 61.8. Now, if we do see the rally uh, pushing higher to the 61.8 Fibonacci extension at 5,150, like the probability of the dead cat bounce is going to drop. And a break above this level, especially if we come close to the 78.6 Fibonacci of that last final leg to the downside at 5,350, let's call it, then we would be entering essentially a sideways consolidation. It could be a flat pattern, it could be a triangle pattern, and this would take at this level, because we're looking at the daily, a few weeks to complete. Okay, but it would keep the long-term bullish bias intact because it would be signaling a consolidation before the next leg up. Now, of course, there's of course the possibility there of going all the way up to the previous peak. Okay, doing a double top or even a false break and then reversing, which still would imply a consolidation up to the level that we come down all the way to 400, for 4,400, excuse me, and then we see how this develops. Okay, so for me, the 5K, it's very critical. It's not just the 50 Fibonacci retracement; it's also like a strong psychological resistance. Okay, a rejection here at the 50, right, could, well, I want to say would confirm, but could confirm that cut bounce and would probably see a retest of 4,400. Any move above the 5,000, okay, could open the door to 5,150 and then perhaps higher territories. Now, a bit more on technicals here, okay. Um, we could turn to the weekly for a bit just to see where we extend. We could, if we consider this as 1, 2, and 3, and 4, we can connect 1 and 3, you see, and we can come down to 2, okay? And as you see on the weekly, we have come down to around that channel top, but we didn't reach that level. So what we want to do is see where the deviations come off this channel to the upside, okay? And we currently come, the median line, it's exactly what we're currently trading, right? So this is a stronger zone, the 5K. Also, you have this median channel deviation potentially forming resistance, okay? But the idea here is if we do see a rejection over here, right, we could still move lower down, double bottom potentially, right, or a bounce, and then we see whether we continue lower down. If we see this level holding, and let's go down on the 4 hour, it would open the door to the 100 Fibonacci extension, which is the typical extension of that leg. If we make the assumption that we stop at the 50%, right? Obviously, you're going to adjust the final Fibonacci level when a top is in, if a top is in. Then the 100 Fibonacci extension of that leg takes us to the 3,800, which is very low. But first, we have the 61.8 Fibonacci, which brings us to the 4,263 dollars per ounce, which, by the way, is the record high we saw back in December of 2025. Now, you can adjust this as prices move up or down, okay? But, we expect to see on the way down when this turns lower, and if it turns lower, we expect to see at least, yeah, the takeout of particular swing points. One would be the 4,810, and the other very important level, of course, would be the 4,600. And in between, you've got the internal swing low of 4,780. But this, because it's the first leg to the upside and the first correction, this is our wave 1 and 2, are more important. Now, given this particular structure over here that we see in the shorter term, and let me just go down on the 1 hour, because this is something important perhaps to mention. We see a potential wedge pattern, okay? This means, because we're outside that particular trend line as we speak, this means that there is potential, right, for a pullback and further continuation to the upside. This, if is a leading wedge or leading diagonal, as we say, would potentially come down to correct to the 61.8 even, right? Which is the 4,600, because typically wedges are followed by deeper pullbacks. So we could see something like the 38, then correction, and the 61.8, and then further continuation. Now, why I'm mentioning this wedge pattern, because typically wedges are followed by impulse moves. So if we were to see something like this happen, we could end up coming in wave 1 and wave 2 and in wave 3 up to 5,500 for the third wave. Now, if, of course, this leg breaks higher and we don't see this coming down, I think it might even be more bullish, because typically what happens is that would be wave 1 and 2, and then all of this would be your wave 1, and then we'll get a second one, and then a third and a fourth and a fifth. That would be our longer term third wave, then a fourth and a fifth. That would be bullish signal. But it would also depend on how much this wave extends. So we should still focus on what is our resistance potentially here. If we go up to 5,000 straight, okay, that would be an indication of a potential new 5 wave leg. Just to give you a better idea, if this is 1 and 2, our 3 would be here, 4 here, and 5 here. And internally, currently, we are looking for something like 1 and 2 and 3 and 4 and 5 in the minor, in a lower time frame. Okay, it's not the right time frame, but just for the sake of showing you this example. So that would also be a bullish scenario. And again, of course, we looking always for clusters. Yeah. So look at the 100, it comes right at the 50%. Okay. So this 50% is going to be very important. But as I said before, if we continue up from here, we're not going to have a wedge, but it doesn't necessarily mean we are going to turn. But if we do turn, though, we are looking at this wave as the most important support for the short term at 4,800. So for me, it's quite volatile still. If the 50 holds, we're looking at a dead cat bounce, just a dead cat bounce, and likely leads to a retest of the previous low. If not, it will break above 5,150, then the door to a previous peak reopens. So trade safe.